You can see my screen, yeah?
Yeah, I can.
Okay. So good evening, everybody, and welcome back to another class. For those of you, 171 of you that have refused to watch, I don't know what match they are watching. Kudos. Welcome back to another class. So, I told you guys in today's class, we're going to be running through top firms, most especially because I'm definitely going to encourage you guys to look towards top firms if you're going to be trading currency pairs, right? Because as much as you can fund your account normally to fund you can trade currency pairs on Deriv as well, or your XNet broker or whatever. As long as you can fund your account to trade, it's also good if you scale up with top firms. For me, I think top firms do a lot of work when it comes to racking up my capital. At first, I was making money from a paid crypto job. That's the crypto bus. I don't know if they still exist. That one Russian community like that. I was being paid $500 weekly to drop crypto setups then. And then when this whole corporate thing became very popular in 2023, I think it was 2023 that a lot of corporates started having spaces in Nigeria, whereby you see traders. Before corporates used to look like um, something that only few traders can pass. But today, just anybody can pass a phase one and phase two, as long as you know how to do the thing. So back then, it used to look like you need to have like 10 years experience. And to be honest, it was even, as at that time, you have like 30 days to pass a phase. Like there were stricter rules and all of that, right? But then you won't deny that these firms, the legit ones, by the way, they help you to scale up. All right. So it's something that I would want you guys to look towards. I think you can get accounts for as low as $35 for a $5,000 account. I think $30 for $5,000 account. You can get accounts $50, $100, like small money like this. You can need to get an account, pass your phase one, pass your phase two, and then get funded, all of that. All right. But then let's look at some interesting things today. Now, there's a trade I'm currently on AUD USD, and I was looking through the winning setups. Dan, can you see my screen?
Yes, I can. Yes.
All right. I was looking through the subtopic on winning setups, and then I saw that some people also had this particular trade. All right. If you look at what happened here, it's still what our typical type A setup. Okay. Now you can look at price was what bullish, coming with series of lower highs and higher highs and higher lows, higher highs and higher lows. We had the first mitigation on this demand zone. This was a demand zone that price first reacted from, more like our type. This was like a type B setup, right? And then after that, price mitigated the setup and then came backwards. After hitting take profit, came backwards to mitigate this one. You can see here we have our typical sweep, our inducement, structural inducement at this point, and then price came mitigate and still on the trade, like right now. And then I think this Solana I showed you guys in the last class as well for cryptocurrency. It hit take profits. You can see what happened there. Still the same model. All these things are what the this week's price action, last week's to this week's price action. If you look at what happened again, our typical what type B setup, price is in a downtrend. All right, price is in a downtrend, and then what happens? You just catch this continuation. You have your sweep, your inducement before price breaks structure, and then even this inducement pulled back again into 50%. I think if I should map out with my Fibonacci tool, okay, from that point to this point, though this one did not pull back, but then an inducement was created before price did what broke out of this range, giving you what your type B setup. And even if you look at another setup, but then I was taken out of this particular one because of my break even. Yeah, this took me out. The move that we passed back took me out. All right. But then if you look at this particular setup now, USD JPY, although it's a stupid pair because it kept on ranging and ranging and ranging, but then it's still what? It's still the same thing. It hits my final take profit today. You have what? Your sweep of market structure and inducement that put back into 50%. When you take from the high, you map out towards to the low, just like this. All right? From the high towards to the low. You realize that what? That the inducement leg pulled back into 50%. All right, just like this. And then price increase mitigated and did what? Hit state profit target, our typical type A setup. A whole lot of these things played out this week. And so I want to ask you now, how many of them were you able to spot? If you even look at Ethereum, Ethereum USDT, today's price action, look at what happened on Ethereum USDT today. All right, price was took out a higher low, and then pulled back to do what? We had our sweep at this point. We had this internal sweep of market structure. We had this break of market structure. We had a pullback, another break of market structure, a pullback into 50% of this leg. And then what happens? Our typical what? Type A market structure. Just like this, price what? Mitigates. All right? And then straight to what? Take profit targets. And even if you look at, I think it was AUD JPY. Sorry, let me check. Okay, AUD JPY. I mapped out this buy, but then I did not execute. But if you look at what happened here now, it's what our type B market structure. An engagement being created before price breaks out of the range. You can see the sweep and then comes create the engagement, breaks out, and then comes to mitigate entry and keeps buying. I told you that these things, even if you don't see setups today, you will see tomorrow, the ones that will meet your entry criteria. If you go to the 4 hours on this AUD right now, you realize that it's bullish. All right, it's bullish. Whatever is happening here is what in the 4 hours discount. So it's bullish. It has met all of your entry criteria. Then why don't you execute brutally? You put everything down. Even if you look at, I think it was CAD. I think most of these JPY pairs, when one of them is buying, all of them is buying. I already told you how this correlation works. When you look at AUJPY, you're seeing a good buy setup. Go to CADJPY, you see something similar. Go to AUJPY, you see something similar. Look at after that AUDJPY, this is CADJPY. The same thing, our type A market structure. All right, price breaks out, your sweep, your inducement mitigates, and you're straight to take profit target. As easy as this. The same thing over and over and over again. I will send you guys a screenshot. You realize that most of even these setups, what do they call it? Like this one, like this USD card was Nelson's trade idea, right? And I also noticed that on the winning setup group, there were people that also mapped this thing out as well. On the subtopic, there were people that mapped this thing out, there were people that tried to trade these things. If you still look at, I'm on a buy on VIX 100. Let me see. Volatility 100. So this VIX 10. Something similar still happened on what? On VIX 10. Let me go to 30 minutes, sorry. So it doesn't look. Okay. Now this VIX 10 on the 30 minutes. If you look at what happened here at this point now, we had a sweep of market structure. We had a break of market structure at this point. We had what another break, giving us what our typical type A entry model, targeting what the previous high. Can you see where price came mitigated and what continued to the upside? Today's price action as well. Today's price action on the 1 hour time frame. All right. Today's price action on the 1 hour time frame. This is something that replicates itself over and over again, no matter the market. I told you guys that for VIX 10 now, I told you that when it mitigates, it runs to the upside. Can you see what happened here on a pair like this now? Can you see after the hammer candlestick was created, the run to the take profit was just so smooth. Pairs like this may not give you a starting point. That's just the absolute truth. They may not give you starting points. So you have to make sure that whatever you're doing, you're loading it very close to entry, because this VIX 10S, 25S, this is how they run. Straight to take profit target. I think even there was something on 10S. 10S as well. You can see the 10X buy. Immediately price. This is still like our type B market structure, where we have our sweep of market structure, and then the inducement created before price broke out, and then price came back to entry. All right. If you look at what happened here now, after the hammer rejection candlestick was created, you can see the run to the upside was just one movement. It doesn't range like what do they call this now? Let's say 100s, 75s. It doesn't range like those ones. Or let me say 250s buys. Once your buys on 10, 10s, 25, 25s, once they mitigate, they are more likely going to have a straight run without stacking points. You can see on the 1 hour now, this created after the stacking point on entry, there was another stacking point that was created here. That's this one now. That was created here. This engulfing. The price came back to mitigate at this level. That was the only starting point that was taken in 1 hour. Maybe if you go down to the 30 minutes, you will see more, but then you realize that pairs like this give you only 1 or 2 starting points. So always put that into consideration whenever you're looking to okay, I think this gave like just 2 after the one of entry. All right. So always put that into consideration whenever you're trading these pairs. That's 10, 10s, 25, 25s, right? But then it's still the same thing over and over again. Your ability to interpret structure, your ability to attach inducement, the ability to map out correct POIs using your validations is just all you need. All of those later things that I said I'll teach you, like the TPO, this and that, they don't even give you as much assurance as market structure would give you for price direction, liquidity and inducement for price target and price intention, right? This, what you know about these models, how to apply these models is literally almost all you need when it comes to trading. Check out any of those traders that you admire that trade a similar strategy. It's the same thing that they do. They probably are handling their psychology better. They're just having better executions than you do. But if you can master this, be able to recognize and spot these things in any market. If I decide to start trading indices, not synthetic indices, the normal indices like the SPX and NAS today, it's still the same strategy I'm going to apply. Nothing is changing. It's for all markets. After all, I think DAX trades SPX and NAS as well. Even you saw and the rest of them, right? It's the same strategy over and over again. Nothing is changing. All right. So it's your ability to not just see it as an entry pattern that you just hop on to any time frame and then you look out for something like this. It's just your ability to not look at it as just an entry pattern, and instead seeing it as as something that you need to have a narrative backing it up. If you look at many pairs, many currency pairs, unfortunately, I was only able to enter for synthetic indices. I think I'm on a sell on 100s. That's if it's this layout. Let me check. If it's saved on this layout. All right, okay, look at it. For synthetic, I'm just on this one. And then for currencies, I'm on a buy on AUD USD. Those are the only ones I was able to execute today. All right, just the 2 of them. But if you look at all of them, they have the same plan, the same structure. They all look alike, and that's how it's going. That's how it's supposed to be. That's how it's going to be always and always. This is the 1 hour time frame. You have your sweep of market structure. You have what price pull up to the upside, and then price pull back into 50% of this leg, giving you your structural inducement. What's next? You go to the 4 hours time frame. If you switch to the 4 hours time frame, you will realize that okay, the 4 hours on this page is currently bullish, and this is the last leg on this 4 hours. You map out from that last leg, from the higher low toward the higher high. You check yourself. The POI that you're trying to use, is it in the first 50%? In this case, yes, it is. Of course, you can see that it is here. All right, which means it was in the first 50%. What happens next? Brutal execution. The moment you have all of your conditions met on a trade setup, execute it. Let me tell you, the thing is that as far as trading is concerned, there's no way you're going to have 100% win rate. It's literally not possible. You can never register 100% win rate. but you can have a win rate as good as 75% and above. If you're if in 10 trades you can register 7 wins and 3 losses, it's not a bad trading rate. Neither is it a bad trading start. 70% is properly okay. If you can register 6/10 with an average RR of 5 per trade, it means that in 6 trades you're making what 30 times of your risk. And then the 4 that you are losing is what -4, which means that at the end of 10 trades of 5 RR each, you're making what about 26 RR. 26 RR times somebody that is risking $100 per trade is about 2,600, if I'm correct. $100 times 26 is 2,600 in profit, right? Which is not a bad start. It is actually not a bad start. 70% win rate is okay. 6%, 60% win rate, it's okay. All right. So I need you guys to look at this thing as I want you to look at it with the perspective of this can save me. And then you work towards being saved. All right. Look at it as okay, this is what will give me an edge. And then you work towards that edge. If you look at the winning setups group, you will see that a lot of people are getting ahead already. There was somebody's that the Ethereum that I showed you now. I mentioned that I think I was going to the subtopic group that I saw this. All right. There was somebody's chart that I saw this Ethereum on. This was a beautiful markup. A very, very beautiful markup. All right. And it's what is one of you starting to recognize these things. You should go to the 4 hours, even in the Solana sale as well. Like these things are everywhere. Cryptocurrency, anything. Now the thing about cryptocurrency, I talked about the BTC alignment with cryptocurrency, which means that when you have a particular analysis mapped out, there are tendencies that if BTC is moving in an opposite direction, it may affect your trade depending on its dominance. All right. So whenever you're analyzing pairs like this, it's still very important to look at what BTC is doing. Because most of these alternate pairs or alternate coins, they are correlated with Bitcoin positively, meaning that it is what determines its move. That is why when you see BTC move from 100K to like 70K, you would notice that alternate coins also dump. When BTC is dumping, Ethereum is dumping, Solana is dumping, this one is dumping. If you notice, Solana got to as low as I think 118 sometime last month, I mean March. Yeah, sometime March, I mean early this month. You can notice that like as BTC is dumping, they are also what's dumping. As BTC is pumping now, they are also what's pumping. You can see this registered like this increase in Ethereum today, about almost 5% increase, 4.58% increase. If you go to BTC USDT, you realize that there is also a similar pump as well, which you can notice our model on. You can see a typical like a type B confirmation. Sorry, I think type A. First was this demand zone. Second was what? This mitigation, like a confirmation. Now, if you map out from here to this point, you realize that BTC did what? A 2% increase. All right? Because it's pumping, most of these pairs are also what? Pumping. Because of the increase in price, most of these pairs are also what? Registering increase in price, increase in prices. If you go to Solana as well, you notice what? A similar pump as well from here. So you realize that this particular Bitcoin, as it moves, most of these pairs, you can see now, that was a 5% increase in Solana. All right. So most of these alternate coins, that's the crypto pairs, like the Solana, in fact, all of the crypto pairs. If you want to find out more crypto pairs, go to your Binance or your Bybit, and then go to the search button there. You see all of the crypto pairs available on that platform. Then you can add them to your trading view. For those of you looking to focus on what do they call this? Cryptocurrencies, right? You can then add them to your trading view. For those of you looking to focus on Forex currencies, you can go to any of these meta traders. Look at all of the pairs available, or you go to even what do they call this? The night market, I think, as well. You see the pairs available. Just go to that place where you have to input pair. All right. Then you can add all of the pairs available. If for people that would be looking to trade different pairs. But then there are some of you that at the end of the day, after a while, you realize that, okay, I think this is the pair that I want to be trading only. All right. I want to have only these pairs in my watch list, this and this, which is also very good. I'm not one that is going to discourage you from trading 2 or 3 pairs. Neither am I the one that would discourage you from trading all of the pairs. At the end of the day, different things work for different people. For me now that I'm teaching you, you can see that I have all of the pairs on my watch list. That is because I don't trade specific pairs, at least not for now. I used to do that before, but for now, I just look for my trading opportunity in different pairs, which is very okay. There are still people that are profitable trading 1 or 2 pairs, all right? But then I believe that in a way, it kind of eases the pressure of always looking out for setups and reduces the chances of you forcing setups if you have many options. You understand? Abundance just reduces that always checking to see if you find a setup because you're trading only gold. Gold does not give you a trading opportunity today. It does not give it tomorrow. It does not give you next tomorrow. And then you start trying to force something. All right. That's why I don't advise that 1 or 2 pairs. But at the end of the day, like I said, whatever works for you. And now to the issue of pop firms that I started with. When I started, I was talking about pop firms. You see, the truth is that the easiest way to scale up if you don't have capital is through pop firms. Forget about it. And you see most people that tell you capital is not a problem if you're this, if you're that. It is actually a big problem. Most of the psychological problems that people have are attached to capital, either limited or unavailability of this capital. Either they don't have or they're managing what they have. That is why if somebody has only $20 as their net worth, this is all they can afford, and they decide to put an account to that $20, trust me, you will be telling that kind of person that, oh, losses are unavoidable, this and this. If they lose $5 and they lose another $5 again, they start becoming attached to that money. They start becoming scared to execute. They start having issues. You understand? So actually, lack of capital or limited capital can affect you no matter how skilled you are. This thing at the end of the day is not just about the technicals, the psychological aspect as well. There are a lot of people that understand these entry models. Trust me, there are a lot of people that understand market structure. They can map out anything for you. I can post a setup today and somebody somewhere would interpret it, would go to their charts and understand why I entered that setup. But they cannot make money in this market. To tell you that most of the times it's not just about the technicals, the psychology plays a lot. It is only psychology that you will see a trade as useless as this USD card and still hold on. Where is that nonsense? You can see what this particular setup did. It's only how many people can have something do like this now? You're running, as at this point now, you're already running about $2,300 profit. It pulls back to entry, back to around 2,200, pulls back again, playing around, just doing all of these things. How many people can do all of this? You would think, oh, it's easy, until it's in real life, like real life. I have a friend that held $33,000. I'm telling you, my very close friend, she's a girl, held $33,000 back to $8,000. And the next time you see something like this, you think they would hold. So psychology is actually like, it plays a very important aspect of your trading. Beyond all of these technicals that you've learned, it is something that you still need to constantly work on. Constantly work on. Whether you're trading personal accounts, whether you're trading pop accounts, whether you're trading you're doing account management or anything, it is something that you need to always constantly watch. The moment you have to start doubting yourself, wahala sets in, all right? Don't put yourself in that position. Now, here's my risk management guide. I told you guys, even after this class, we're going to be having subsequent classes, I think, every Saturday. Majorly for trade ideas one. That's what we're looking into for the new week. And then secondly, for I think this is where I want to bring in the TPO. I didn't talk about it yet, but I don't want to interfere with what you guys are learning in that's the structure and all of that. I don't want to interfere with it yet. Then psychology, and then just reviewing the trades on the losing subtopics, right? Looking through the trades that were lost for the week. That's why we talked about the losing trades for correction, right? So majorly these are what we'll be having whenever we meet on Saturdays. Okay. But then back to this. Now let me mention something. The truth is that as a trader, different people have different perspectives. So whatever I'm going to be saying now, look at it from this is Star's perspective. You can decide to use my template, or you can tweak it into something that works for you. Now, for me, the moment I start considering myself that I'm in a losing streak is when I have 3 losses consecutively. All right. When I have 3 losses in a, that is when I start considering it as what a losing streak. Okay. That's if I have 3 setups meet all of my criteria. I am sure that these 3 setups, I didn't miss anything that I shouldn't have, or all of my validations were complete. I had a good conviction on those setups, and then I still would have I still take a loss on 3 of them. Like I take a loss on the first one, I take a loss on the second one, I take a loss on the third one. So 3 of them, no in between win. 3 of them were straight losses. That is when I start considering myself in what in a losing streak. Now, yes, one of my methods for coming out of losing streaks easily. You know, the moment you enter a losing streak, you don't know where you're coming out. That's the truth. Because it is at that point that you start having psychological issues. It is actually for people that have mastered their emotions to an extent that will be able to scale through all of this easily. Trading is not as easy as you think. All right. Now, here's the thing. If you were initially risking $1,000, I'm using $1,000 for my example because my prop account is a $200,000 account. So I risked $1,000 per trade on the account. But then I'm using $1,000 for example. You can relate it to $100, $50, or whatever works for you. All right. So let's say you're risking $1,000 per trade, and then you take your first loss, you take your second loss, and you take your third loss. This is when it comes to your head that what I am in what a losing streak. After 3 losses, you should be scared. Okay? Now, the moment you notice that 3 consecutive losses, I want you to do something instead. Reduce your risk by half. If you're executing the 4th trade, don't execute with $1,000. Execute with $500 instead. The moment you register 3 losses in a row, reduce your risk by what? By half. So now, the next 3 trades, right, you're executing with what? With $500. And if that losing streak still persists past these 3 trades, meaning that after the first 3 trades of 1,000, you have what? And next 3 trades of what? 500. And you still registered losses in the 3 of them. Take a break and look at what you're doing wrong. It is virtually almost, emphasis on almost impossible to register 6 losses in a row when you're doing something right. It is almost impossible to do that. So when you have something like this, right, it means that something is wrong. Reach out to me. All right? Reach out to me. If you can't complain on the group, then reach out to me personally. But in cases like this, if it's like different markets, let me say synthetics, currencies, then the other indices and cryptocurrencies separately. All right? What I now want you to do is to reduce your risk by to 250. This way, it is easier to recover when you are out of the losing streak. Because instead of $6,000 drawdown at this point, instead you'll be registering what? Around 4,500. And instead of $9,000 drawdown at this point is what? About less than 5,500. So for every time you register 3 losses in a row, cut your risk by half until you're back to break even. and then you continue with what your consistent risk. And one very important thing I want to mention is if you're going to be trading prop firms are not your personal accounts. Trust me, they are not as easy as you look at it. They are on a whole different level when it comes to psychology. These things are not so easy. And that is why you see that it is not everybody that purchases a prop account that passes a prop account. Because it's not for everybody. It's not as easy as when you see people flaunt certificates, don't think they just bought an account and then they just pass. There's a lot of things. Most people can pass phase one and what fail at phase two. People buy phase one, they pass phase one, they pass phase two, they get funded, but cannot make one payout. It's not easy to withdraw even $100 from a prop firm. It's a whole different thing psychologically. Whenever you're trading a prop firm, pay very good attention to their rules. There are prop accounts that have what consistency rules. Consistency means that if you use one lot size at the beginning, you must use one lot size consistently. Sorry. If you use 0.01, you must continue with your 0.01. Like they have consistency rules like this. There are prop accounts that don't allow you to hold trades through the weekends. There are accounts that don't allow you to trade specific pairs. There are accounts that don't allow you. So whatever pair, whatever prop account you're using, make sure you pay good attention to their rules. There are people that would make $6,000, $10,000, 15K payouts, but they would deny this payout because they'll tell you, oh, go to our website, we had this rule. Go to our website, we had this rule. So if you don't want to see what you worked for, go down the drain. When you're done passing your phase two and then they send you the rich email address. Why? Because they say, oh, you didn't meet up with one of our rules and all of that. You need to pay very good attention to the rules of these prop firms if you're going to be training them. All right? The first thing you should do is go through what is required of me as a trader. How many percent do I need to target in my phase one? You know, the thing about accounts, for now, I have, okay, let me use an example now. I have a $200,000 account on Funded Nest, right? On Funded Nest. Now, that $200 account, that $200,000 account, it has an overall drawdown of what? 10%. Which means if I ever lose 10% of this account, I'm going to lose what? Access to my funded account forever. So which means that I am only allocated 10%. So in all honesty, this account is not a $200,000 account. It is actually a $20,000 account. It is your allocation that you would be using to make decisions, not what is written to you. If you purchase a $10,000 account today, you have access to only $1,000. Because if you lose 10% of this $10,000, you've lost your account. Which means that if you lose $1,000, you've lost the entire account. So which means that it is that $1,000 that you have, not the $10,000. Your $50,000 account is just what? $5,000 allocation. Your $5,000 account is just $500 allocation. So whatever decisions you're making based on the 10% overall drawdown that is allocated to you. So if I have a $10,000 account, I'm not going to be risking $500 per trade, because if I lose 2 trades, I'm going to lose what? My account size, since I have only what? $1,000 allocated to me. So you're working with your 10% drawdown instead. All right? These are the things you need to be careful about. Make your trading plan, your trading journal. I sent you guys templates. Work with them. They will help you more than you think. Your subconscious registers these things when you've done it over and over again. There are a lot of things that you would face, especially as newbies in the market. You see, when a trade triggers and you are not in it, all right? Even me, as I am like this now, I've been trading since 2021. This year will make it about, I think, 4 years now since I started trading. There are times whereby I still have, like, I had a setup that I was done analyzing, but then I didn't set my limits, and it came and it triggered. As old as I am, it's still, that kind of thing still gets to me, all right? I'm like, I should have just placed this thing. then talk more of somebody else. That time you start feeling the urge to FOMO. That's to now buy into something that has gone far or sell into something that has gone far. Do you understand? So there are a lot of challenges that you're going to face. But your only assurance of profitability is being able to conquer these things, being able to override them. You understand? You need to be as conscious as you are, as you're conscious technically, psychologically as well. You need to apply this consciousness. Don't let your winning setups, don't let yourself take losses on your winning setups. A setup that hits take profits should reflect on your account. Very importantly, don't take losses on your winning setup. Most of these things can be due to overstacking. If you don't understand stacking, it's very okay not to stack, right? Until you start getting it. I think somebody was saying, "Oh, I'm stacking, and then my money feels when I was stacking." Like, calm down. Actually, calm down. This is just April. April just ended today. May starts tomorrow. You have till December. There's a lot of time during the year. Once you can get the foundation right, you won't even mind the way you blow up. Trust me, like it's just to make sure that you recognize these things properly first. When execution time comes, it comes back to back, brutally, back to back. Today is $100, tomorrow is $1,000. Let's like just make sure that you actually feed yourself enough to be well prepared for the journey as well ahead. All right. Now for the issues of partials and break even, I'm going to take that as well. I already told you guys the list of things that we're going to be talking about majorly in our weekly classes. Position sizing. That's where pattern and break even come in. Now, let me just talk briefly on this thing. Now, this particular pattern and break even, it's not all traders that actually believe in break even, because there are times whereby price can move to a point where people break even, and then you realize that what it comes back to your entry to take you out, which can affect you in a way psychologically. But I will teach you, and then you decide what to take and what not to take. All right. You'll be taught how to take partials. You'll be taught how to break even. I don't take partials on my trade because taking partials affects overall risk to reward ratio. So I, for a trader, I don't take partials. But if you would want me to teach you at what points where you can take partials, I would do that. All right, I will do that. I'll take that as well. Okay. So I need you guys to give me your best in this. Like literally, I want you to give me your best. This is something that I am so sure that if you've been listening from the beginning of this class till today, there's no way you're going to still be the same. There's no way you'll be looking at the charts the same. At least, if not for anything, all of you should be able to map a market structure at this point. You should understand what demand and supply zones are. If your mates should send charts to the group, you should be able to contribute. All right? You should be able to say something. That is what I want. And now it's not just about saying something. It's now time to start showing workings. So you need to study. You need to study. You need to look at all these things. Wake up in the morning on a trading day. Start looking out for trading opportunities. They won't come to you on your bed. Even if I give you trade ideas, I won't always be available to. At the end of the day, if this ends in a year from now, how are you going to be making money off trading if you can't recognize these things yourself? So you still need to work on yourself. You won't always be spoon-fed. All right? Wake up in the morning, look out for these trade ideas. If you don't see on cryptocurrency, go to forex currency. If you don't see on forex currency, go to synthetics. If you don't see that day, go to the gym, do anything different, come back the next day. You must see something somewhere. There's no way you look at all of the forex currencies, all of the synthetic indices currencies, and all of the cryptocurrencies, and you don't see one thing, except you did not look. And even if you don't see one thing today, you don't see one thing tomorrow, is what almost impossible. Almost impossible. I used to missed it, but not that it was not there. Okay? So I need you guys to put in all of your best, all of your efforts, everything that you can into this. It is definitely going to be worth it. I'm telling you. You're not my face of students. And there's nothing that I did there that I didn't do here. Absolutely nothing that I did that I didn't do here. So I want it to be as hot as it is over there as well. I want to see crazy results. I want to see crazy efforts. For me, so I'm going to be pushing. All right. I'm not every time from now, every Saturday, 9 p.m. We're still going to be meeting. We share trade ideas, we exchange trade ideas. But you understand, we'll take trades, we'll do all of these things together. But I need to see effort as well. I need to see more people contributing. This is a class of over 700 and about only 180 something are on the call, or probably a little above 200. All right. 500 people are either waiting for recording or watching football match or doing all of this. At the end of the day, it's not me you're doing. That's the truth. You've paid me. All right. But then I need to make sure that you get value for what you paid for, and not just value, results. That's what makes sense to me at the end of all of this. Let me say I taught this person. All right. So I need you guys to get to work. Seriously, seriously, seriously. I need you to get to work. Tomorrow again, maybe I don't know. I'll look out for a couple of POIs today. Probably see one or two. All right. Or the or tomorrow's price action. But the week is just tomorrow is just Thursday, Friday, and then a new trading week next week. But then at the end of the day, just let's see what May 2nd presents. Since tomorrow is the opening of a new candle. Today, the monthly candle is going to close. Tomorrow, a new candle is going to open. So let's see what the new month brings for us. And I wish you guys, literally, and in all honesty, I wish you guys all of the best. I'm still here. I'm still around. All of your questions for the question subtopic. Now, any trade that is dropped on the trade idea group, if your trade setup plays out, it should be sent to the winning trade subtopic. If it doesn't play out, it should be sent to the what? The losing trade subtopic. Now, it's very important that your setup are sent to the losing trade subtopic because I talked about the weekly sessions we're going to be having, which means that this setup are going to be reviewed, all right, to see, okay, this is where I went wrong, what I would have done better, or okay, all of this actually met all of my criteria, it wasn't my fault, and all of that. So it's very important that those setups are being updated on a daily, all right? And then any setup you're sending to either of the groups, whether winning setups or losing setups, you should have it before. If you don't know how to save chart layouts like this now, save image, if you don't know how to save chart layouts, then you can just screenshot instead. But make sure you always keep what a before analysis and then your after analysis and execution. Because I can just come to my chart and say, okay, this is my this thing now, no execution, none of that, all of that. There's no need of sending a trade or having an after of a trade that you're not making money from. So if you're still learning, have a before. If you're done learning and you're executing, have what and execution. Okay. So let's I wish you guys the best, and this is just the beginning of our journey together. I'm still here, I'm still around, and you know, I'll see you guys again 9 p.m. Saturday. Until then, take care of yourselves. Stan, please.